153k on a 34k salary. That is what the bank says you're worth when it comes to mortgages. But it's not fixed. You can stretch that, and there are 3 ways to do it. Stay with me. Maybe the first one will decide which house you get into. Here's how it works. Most lenders will let you borrow about 4.5 times your salary. So 34 grand times 4.5, that's roughly 153k. That's your max, not your comfort zone, your ceiling. No room for rice, no room for noodles. To put a number on that, if you've got 10% deposit saved, about 17 grand, you're looking at a property around 170k, all in. If you've only got 5%, you're closer to 160k. Sounds like marketing rubbish, right? Affordable housing. Let's talk about what that actually buys you where you live. Now, here's where people slip up. They type their salary into one of those online how much can I borrow calculators. A big number flashes up and they think jackpot. That's the hard part done. It's not. That's the lender's ceiling. That's the top amount. There is no room for error. If your boiler breaks, your windows break, anything breaks, or if you lose your job and you're on a single salary, you've got big problems. It's a gamble. None of this is your fault. This is confusing, and it's designed to be that way. The bit nobody tells you about buying a loan is the numbers. They get thin very fast. Let's be realistic, because the whole point of this channel is no rubbish, no hype, just get to the point. On 153k mortgage in the north of England, you might find a nice little 2-bed terrace. Probably needs some work. In the Midlands, very small flat, not in the nicest of areas. In London, in the south, car parking space. That's the bit the calculators don't show you. The salary numbers sound fine. The house numbers do not stretch. So what do you actually do? Here's 3 things. First, stop borrowing at the ceiling. Just because a lender will give you 153 grand doesn't mean you should take it. The move is simple. Work out your monthly take home. Keep the mortgage payment under about 1/3 of that and reverse engineer the house price from there. That's your real number. Second, my favourite, the deposit is your leverage. Every extra grand you save lowers the amount you borrow, which lowers the interest you'll pay for 30 years. 1 grand saved now isn't 1 grand, it's close to 2 once the interest done with you. Third, check what help you actually qualify for. Lifetime ISA bonus shared ownership help to build. Some of these are genuinely worth a look, and most people never check. You wouldn't leave 200 quid on the side of the road. Don't leave it on this table either. Here's the thing. Buying a house on 34k a year isn't impossible. It's just smaller, much smaller than the brokers and the internet want to tell you. On that salary, you're looking at roughly 153k, and that's if everything lines up perfectly. And here's the bit nobody says out loud. Buying just isn't what it used to be. The motivation for people to buy just isn't there. Renting cheap, saving hard, and investing is very popular these days. That's a completely legit way to build wealth now. You're not behind, you're just on a different route. If you want to know what that route looks like, I've got videos on investing, how to get started, what to actually put your money in. That's the stuff that makes the real difference to your deposit in 10 years. If this hits home, let me know in the comments.